Welcome everyone to Vested Interest. This is Shane back again for another Stock Pick of the Day video. It is Wednesday, December 4th. We're going to take a look at Procter Gamble. This is out of the consumer staples sector. Before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that subscribe button down below. Hit the notification bell so you're notified whenever we put out any new content. I do this Stock Pick of the Day video series Monday through Thursday whenever the market's open. If you'd like to buy me a cup of coffee, there is the thanks button down below. Go ahead and click that. I think there's several tiers down there you could donate to the channel with. For those of you who cannot do that, completely understand. Times are tight, money's tight. It's just the way it is. For the subscribers out there, really appreciate you guys. The channel continues to grow because of people like you. And this is the Vested Interest Stock Screener. This is the criteria we will be running through in the video. We'll check it at the end to see if it meets 5 of 8 to make it onto my watch list. If it was a bank, I do add in price to book. That's why this is highlighted in green. Then it must meet 6 of 9. So financial companies out of the financial sector, banks, insurance companies, stuff like that, price to book. 1 being fair value, anything undervalued, anything overvalued. That doesn't necessarily work for all companies. You can use price to book for all companies, but if you do use price to book, make sure you're comparing it to companies in the same sector selling similar products. Now back to Procter & Gamble. Check them out at their homepage, us.pg.com. That is where I pulled this information from. Again, that is us.pg.com. That is their homepage. Who we are, making every day more than ordinary. Our brands are trusted in millions of living rooms, kitchens, laundry rooms, and bathrooms, and have been passed down from generation to generation. We are the people behind the brands you trust, and we're committed to making people's lives better in small but meaningful ways every day. And that's what they do. They sell everyday products that you probably use, right? I've pulled some of them that you may be aware of. Pampers, Loves, anyone who's had kids probably is well aware of those brands. If you ever do dishes, you've got Dawn, Gain, Cascade, Febreze, Crest, for Scope for mouth rinse, Crest or Oral-B, and Fixodent if you have dentures, right? These are all brands. Mr. Clean for cleaning your house. These are all brands and many, many more under their umbrella. You can check them out again at their homepage, us.pg.com, and check out all the other brands. Again, I'm sure if you open up your cupboards, your pantry, you probably your drawers upstairs where you keep your toothbrush and toothpaste, you probably have multiple products from Procter & Gamble, whether you realize it or not. Gillette, razors, I mean, there's so many products. Now, the reason we're taking a look at them, down 0.18% on the day. Not a big drop, but a drop nonetheless. And I wanted to look at this. This is in my portfolio overall. We are talking about the Procter & Gamble company, ticker PG. Closed out the day at $175.11. 52-week range as low as $142.50, as high as $180.43. They need to drop below $163 and some change to be at their within 15% of their 52-week low. So they are not quite there yet. A market cap of $412.391 billion, a large cap company here, a beta of 0.41, so they are less volatile than the overall market. PE ratio on this one does seem a bit elevated for my liking for a company this size and as well established as it is. 30.14 PE seems a little high. EPS is sitting at $5.81 per share. Earnings date coming up sometime between January 21st and January 27th. Yep, we are talking about January 2025 already. Forward dividend is $4.03. They are a quarterly payer, so divide by 4. Nice starting dividend yield here to 2.3%. Ex-dividend date was October 18th. They paid out on November 15th. And a one-year target estimate, at least according to Yahoo Finance, where I pulled this information from, $180.46. So they see some upside from where it currently sits, at least according to Yahoo Finance. Now, I like to look at dividend yield theory to see if the company is potentially presenting any undervaluation. To do that, we look at their 5-year dividend yield average at 2.41% compared to its current 2.3, or over here where it says forward 2.3, same numbers. And since this is lower than their 5-year average, that actually speaks to overvaluation, at least according to dividend yield theory. I like a payout ratio under 75%, except for companies like REITs or business development companies. Then I don't mind 90% or higher. But for a company like Procter & Gamble, it's under 75% for me. Typically, this is sitting at 67.14. Looking at free cash flow, I want growing free cash flow over time, because typically if a company has growing free cash flow, they grow their dividends along with it. They can also pay down debt, make acquisitions, reinvest back into the company, and buy back shares. Going back here to June 2022, you can see 13.5 billion, 2023 13.7, so a jump up there, or slightly jump up there. 2024 16.5, and they're calling the trailing 12 months, which does include part of 2024, 15.8. So it looks like, probably pretty similar numbers to what we saw last year. At least we'll have to wait to see how the rest of the year shakes out. Obviously, they'll go through June of 2025 for a whole year, but part of the year is already recorded in 2024 numbers. Now, looking at this, they are repurchasing their shares. So 10 billion in 2022, a drop down in 2023. So even though it looks like the free cash flow went up in 2023, they actually decreased their repurchase of shares. So I would say that their free cash flow actually went down a little bit. 2024 up to 16 billion and still decreased their shares. And then they are still repurchasing shares, at least in the last trailing 12 months. But a lot of that, again, is 2024 numbers here. Now, jumping over to stockanalysis.com, they have 20 analysts that take a look at this, and I do recommend more than one source for information so you can make sure the information you are getting is accurate and up to date. The 20 analysts here call it a consensus buy, and it actually is leaning close to a strong buy. Low estimate of $161, which would represent a 8.06% decrease from where it currently sits, and that would be within 15% of their 52-week low. I'd love them back in the 160s. Average estimate of $180.45, pretty close to what we saw with Yahoo Finance on the previous page. That would represent a 3.05% increase from where it currently sits. And if it happened to hit their high $209 estimate here, that would be a 19.35% increase. All the while, you could collect that 2.3% dividend yield. Jumping into statistics, I like to look at ROE, return on equity, and ROIC, return on invested capital. I like 10% or better on this. This tells me how well the company is reinvesting its capital back into itself or investing its capital overall. Return on equity sitting at 28.77%. Return on invested capital at 15.33%. Both of these are over the 10% I'm looking for. Earnings per share sitting at 9.13%. I like 5% or better, so that's well above what I'm looking for there. And revenue growth forecasted at 4.88%. Nice to see. And again, I am long Procter & Gamble. I do have 43.59018. It is a position I would like to add to, 43.59081 shares. I am down slightly. Well, actually, no, I'm up. I am up. They're down today. I'm up 19.51%. On this one, up $1,245.93. My cost basis is $146.52. So I wouldn't mind nibbling on this one. I may actually nibble on this one if it drops down below 170. I'd like to build this out and get it to 100 shares. I'm a ways away from that, but it is one I would like to add to, even though I am up. Quarterly payout, as we said, payout ratio, they're saying 69.48. I think Yahoo Finance had it at 67. Either way, under the 75% I'm looking for. They are getting up there, though, so it is something to keep an eye on. Dividend growth, 6.05%, so nice high single-digit dividend growth there. Growth for 68 years. Buyback yield is positive at 0.29%. Shareholder yield at 2.6%. They do pay out on the February, May, August, November, so they are off the typical payout schedule of most companies, which I like that as well. Going back to April 2022 here, they were paying 91 cents and some fractions of a penny. In April 2020, in 2003, they raised it up to 94 cents and some fractions of a penny. April 8th, 2024, most recent raise up to $1 and some fractions of a penny, and that's where it's remained. I would say it looks like April. Yep, it looks like April is whenever they do that raise, so probably look for April of 2024 to be the next one. All right, let's run through the screener and see how this one stacks up. Understand the business. We get a check there. That's where we started. They sell a lot of the products that you use, from toothpaste to diapers, shaving, washing your dishes, washing your clothes, you name it. A lot of products that you're probably using. Maybe you don't even know. Growing free cash flow, a bit up and down. Growing dividend, yes, high single digits, above 6%. Payout ratio is under 75%, though they are getting up there, 67, 69%, depending on the source you look at. You want to start watching that. Dividend yield theory says they're potentially overvalued, so no check there. They are not within 15% of a 52-week low. They need to come down to below 163 and some change. Return on invested capital, return on equity, both over 10%, so check there. Earnings per share growth was well over 5%, almost 10%, so check there. We're looking at 1, 2, 3, 4, 5. It would make it on my watch list. It is in my portfolio, so it's not going to go on my watch list, but it is one that I am watching because if it does get within 15% of its 52-week low, I will be adding to the position. If it dropped to 170, 171, I might even add a little bit there. Well, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So drop your comments down below. And if you have a suggestion, drop that down there as well. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping in. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing in your educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor.